Welcome to the What to Watch video update, where this week we're asking the question, is the S&P 500 only pulling back or starting a decline? A week ago when I did this video, I found one chart that was kind of negative, and all the other charts that I picked out for the video were positive. And I even stated in that video, that's when I start to get a little bit nervous. Watching the intraday action as the week unfolded, it looked like the market was exhausted. We could potentially be dealing with the end of FOMO, the fear of missing out. Folks that were jumping in right after the election was over, and then that whole week. And then people last weekend that evaluated things, put in their buy orders, and that gave us a positive open on Monday. And then we just kind of treaded water. But as the week unfolded, and if you watch the daily videos, we started to see some weakness creeping in. Now, we never know if that's going to turn into anything, but we like to know about it beforehand in case it does start to develop into something. And as of right now, it has. It's turning some of our internal indicators more negative, and I'll go through that. And so this week, I've got some positive things and I have some negative things. And then the third area that I just started adding to the video is just areas that I'm keeping an eye on, not necessarily positive or negative, but just something that we like to watch. Okay, before I get into this, there's a thing called the SPX investing program, and I developed the program. The website's up and going. It's free until the end of 2024. If that interests you, there's a link that will take you to the website or to a video that talks more about the program. Or you can send me an email if you have any questions. One of the benefits is that all the videos that I do every day and every weekend, members get immediate access to those as soon as they are available, where I hold them back on YouTube and Rumble. Also, this is just one of the weekly videos that I'm doing right now. I really focus on the daily videos, and that's why I keep saying if you'd watched the daily videos, you would have seen the weakness that had been developing over the week. It wasn't really making itself known as far as price. That started to develop as we got into Thursday and Friday's session, but we saw it developing even before that. And that's where you get insight from watching the daily videos. Okay, let's go through and look at some of the positive things. Now, as with all of these charts, quite often there's something positive to take away and there's something negative that we can take away as well. First of all, yeah, we're going down, so the daily chart is a little bit negative in that context. And we did drop below this dashed line here, a pivot point, but we're still above this other pivot point, which is closer to where we gapped up right after the election. So we have to ask, is the market going to go back? We filled some gaps already. Are they going to go back and fill some of the other gaps in the upcoming week? And then we'll be done with this little decline and then we'll turn and be able to go back up. That's one thing we'll be watching. Or if we break through this pivot point and continue to go down below the 20 period moving average, are we going to hit the 50 period moving average? Okay. Then this is still positive because the blue line's above the red line. Now, both have been taking a hit here, and we're not showing the strength that we had been seeing earlier on in the month. But for the most part, it's taken as positive because the blue line is above the red line. That means that on an intraday basis, large cap growth is outperforming large cap value. S&P growth of value. This is an end of day chart where, yeah, it's coming down a little bit here, but we're still in an uptrend. The blue line's above the red line. We're not really breaking to the upside, but we're not really breaking to the downside either. And we look at growth of value, a couple of ETFs here. We're coming down, but we're still at the top end of the rainbow. Small cap growth of value, improving, still negative longer term with the trend. We were starting to break out. Now we're starting to pull back. And this is pretty much what we've seen with the small caps in 2024. After the election, they broke to the upside, and then they spend the next number of days giving it back. Are we going to find some support in here? Are they going to come back down and fill this gap? Are we going to see more weakness going forward from here? And we're seeing a similar thing here with mid caps in the growth to value ratio. Still longer term downtrend. It had been breaking out and showing a lot of improvement, but now it's starting to pull back. The mid caps, after setting an all-time high, they've been giving back as well. Are they going to try to come in and fill this gap before they turn and go higher, or is more weakness going to develop after that? This is a positive area, discretionary, which is Amazon, Tesla. It's holding up, and we're actually seeing a little bit of strength here in the discretionary equal weight ETF, even though it pulled back lately. What's helping this overall ratio is weakness that we've been seeing in the staples. So discretionary, the things that make life fun, staples, toilet paper, toothpaste, the things that you have to have. And when this ratio is going up, that means discretionary is outperforming staples, and this can still be taken as positive. Large cap growth pulling back right now, but still above the 50-day moving average. So it's not showing an awful lot of weakness, at least yet, but we'll have to see. Is this going to continue to go down, or are we going to find some support, possibly fill the gap, come down to the 50-day moving average, maybe, and then bounce up off of that? The VIX, after being really high before the election, it really had come down. Now, with Thursday and Friday's session, it's starting to go back up. So that's negative. But overall, the VIX is quite low compared to where it was while we were dealing with the election. And the momentum of the VIX continues to be down, and that's positive for stocks, even though it did spike up here in Friday's session. Showing some weakness here, but still positive overall. When you look at the green up here, that's new highs, and we're seeing them really outnumbering the red, which are new lows. That's the positive side. The negative side, we're seeing a contraction of the new highs, a little bit of an expansion of the new lows, and our 5-day moving average is starting to decline. And our 10-day is leveling out and also starting to decline. So there's some positive and negatives here. But when you look at all the green and all the red and compare it with each other, it's still looking rather robust for right now. And we're taking a bit of a hit here with the advanced decline line based on price and volume. It's coming down, but we're still above these advancing moving averages, another internal measure that's holding up for the time being. And another thing that I noticed, other than Friday was its own day because it was the monthly options expiration day, and we typically see a real pickup at volume then. But when we were coming down, after we really were going up and then starting to roll over a bit, we were seeing volume going down, down, down. And that's what this oscillator tries to measure. And that's taken as positive. When we're going up, we saw an increase in volume. And when we're coming back down, we see a decrease in volume. So for right now, until proven otherwise, that should be taken as a positive thing. And we're declining here with the 20, 50, and 200-day moving averages, but not really rolling over all that much. Like the 20 is still above 50, and 50 is my line between positive and negative. We're still above 50 with the 50, and we're still looking weaker here, but strong with the 200-day moving averages. And we're still holding out right above the close on Friday was right above the 20-period simple moving average. So for right now, the short-term trend is still positive, and this is what I use to define that. If we had closed down below it, the short-term trend would have been switched over to negative. As long as we maintain this, it's still positive. But if we fall further down, that's going to turn the short-term trend to negatives. And really, I count the close. I mean, we could go all the way down here intraday, but if we close back above the moving average, we're still positive. And here's a bunch of different moving averages here, still holding out above the 20-period simple moving average. And we're above all these other moving averages, the 50, the 100, and the 200, and they're continuing to go up. So on a trending basis, based on moving averages, we are still positive. And this is an indicator I developed a long time ago. I used it for a trading system, and I don't do the system anymore, but I kept the indicator. This is a 20-period simple moving average of the open, high, low, and close. And this creates its own little mini rainbow. And when we're above it and coming down, quite often one of these lines will provide support. And so far, they've been doing that. If we break down and close below this, that will turn things more negative in the short term. We're still positive with the parabolic SAR. Even after the decline on Friday, we still see the dots underneath. We're still positive as far as momentum, even though we're seeing some weakness here with the short term as measured by the slope and the TSI. Then I have 3 intermediate term momentum oscillators. Yeah, they're rolling over, but they haven't crossed negative yet. The 2 long-term oscillators, the Trix and the KST, are still going up. So that hasn't switched over to negative either. And even though we're seeing some weakness here with those stocks inside of the S&P above their 20-period moving averages, we're still above 50. If we drop down below 50, that would turn this chart negative. And this is a weekly chart of the S&P. And even if you go back to October of 2023 when we hit a bottom there. This is still looking okay. We're seeing a series of higher highs and higher lows along the way. It doesn't go straight up. There were some bumps. Here was the drawdown that we saw last spring. Here was the day that the Earth was supposed to end here, August 5th, when everything seemed to be falling apart. And then we bounced back up out of that. So for right now, even though we're giving back some gains that we've been seeing, we're still looking okay here longer term. The NASDAQ came right down to this R1 level, and this has been outperforming the NASDAQ 100. If you watch the other videos that I post, specifically the intermarket analysis videos. So this support level is still holding. Now, we're just a little bit below this pivot point with the NASDAQ 100. So that could be actually taken as slightly more negative. But this chart is still positive since we have the blue line above the red line, the 50 above the 200, and we haven't come down to actually test that yet. The Wilshire broad market measure here, after setting a recent all-time high, has been pulling back, but still above its 50-day moving average. And the total U.S. stock ETF, setting an all-time high, pulling back, still above its 50-day moving average. The financial sector has been doing really well, and it was actually up in Friday's session and just coming off of setting all-time highs. The FANG index set an all-time high earlier on, but now has been seeing some weakness, but still above its 50-day moving average. And these are just a couple of trend lines that I put on here. This is a longer-term trend line, and this had been providing some kind of support. Not so much earlier in August and September, but we were hitting this area and then finding some support off of that. Well, then there's a shorter-term trend line, and we did break back above that. But as we've gone throughout 2024, we have not been able to break above this trend line again. We tried earlier in the week, but only to close back down below it. Now, if we continue to fall, will this trend line hold? And if we come down here, will we be able to bounce up off of that? If we start to go up, is this shorter term trend line going to continue to provide overhead resistance? Looking at the ratio between the NASDAQ 100 and the Dow. Now, the NASDAQ, that's tech. That's the NASDAQ 100. The Dow are considered to be the best quality of all stocks, even though NVIDIA just got added in there. So it's also a growth stock. And this ratio is holding up for the time being. It's not falling apart the way the Perma Bears said it would, the way it fell apart back in 2000 and then right at the end of 2021. It's still hanging out right around these very high levels with this ratio. This is a weekly chart of the NASDAQ 100. Even though we're declining, we're still above this trend line going back to 2009. And the market is still anticipating a soft landing. We do a ratio between the S&P and 3 to 7 year bonds. Yeah, we're coming down, but we haven't even come back into the rainbow, at least yet. And another ratio of the QQQs, which is the NASDAQ 100 to the small caps, still hanging out at a very high level. Seeing a little bit of weakness here, but not falling apart, at least yet. And then we look at the broad market, and we look at the Amex, NASDAQ, and NYSE, and take a 5-period moving average of the highs minus the lows, coming down, but still above zero. This is still positive. Now, this can take some time. If we do drop below zero, of course, that's going to turn things more negative. But for right now, it still remains positive. Now we look at the negative side. And when we were going up with sentiment, that's positive. Well, we started to roll over, and now we're coming down. And so now the context is that sentiment is negative. It'll turn even more negative if we drop below 50. And then we did see in the short and intermediate term a cross here. The red line's crossing above the green line. That's negative now in the short term, according to the ADX. In the intermediate term, also seeing the red line crossing above the green line. That's also turning the intermediate term trend negative based on the ADX. We're negative in the short term when we look at the advanced decline ratio. That's the blue line. It's below zero. We're declining, but still above zero with the 39-day advanced decline ratio. So short term, we're turning more negative. More intermediate term, we're declining, but we're still positive. And we're turning more negative with our smart money indicators. We're dropping below the moving average here with the accumulation distribution. Whenever we drop below the line, the red moving average, that turns it from positive into negative. And we never did see much strength here with the Chaikin money flow. This is something that I pointed out a week ago that was a concern, and it's still a concern. In fact, it's turning more negative here. We're actually going down with the histogram, which is the red bars, and the red line is going down also. So that's showing some weakness and actually staying negative. And where the Chaikin oscillator had been positive and was really going up, we've rolled over and now we've crossed back below zero. So this has turned negative also. So our three smart money indicators have now switched over to negative. And we're positive here because the green line's above the red line. But see how the green line's coming down and the red line's going up? Any more weakness and we might see a cross here. And if the red line crosses above, that would turn this chart negative. And we're seeing a bit of a pullback here with the cumulative advanced decline line for the S&P based on price. And we're also pulling back a little bit more based on volume. Now, the one thing that's a bit negative here is when we look at the cumulative advanced decline line for the S&P based on price, we did not exceed the previous high, even though price did that. Where we did make a new high based on volume. Now, that's positive, but until price can actually prove it to us, we just have to be a little suspect of that. And then this is what I was harping on, is something really positive. If you go back to Halloween, that's where we bottomed with the S&P growth to value ratio on an intraday basis, and we were looking pretty good. And then Friday happened, and now we're back down to levels that we were at before we started this nice little climb up. So this is actually turning more negative. And we're seeing some weakness now where we had been seeing strength with our growth to value ratios end of day. When we compare the QQQs to the SPY, we drop below the moving average. One bright area is the discretionary to the S&P is actually holding up quite well, and the moving average is going up. But when we compare large cap growth with large cap value, we're now dropping below the moving average. So we're seeing some weakness in the large caps, turning over, but still positive with the mid caps and coming down to the moving average with the small caps. And this had been positive for pretty much most, if not all, well, not all, but most of 2024. When we take a 10-day average of the S&P 500 highs minus the lows, we had been camped out. If you go back to the beginning of 2024, we spent a lot of time up here. This was last spring, and then we saw the drop last summer, but then we were coming back up into this area. This is continuing to decline right now, and this is intermediate to even a little bit longer term negative. And we look at the condition of the short-term trend as measured by the 20-period moving average. Now, this is a double and triple exponential moving average, and it moves faster than the simple and exponential moving averages that I use on the other chart. This is showing more weakness. Where we're still positive on the other chart, we close above the 20-period simple moving average. We're dropping below both the green line and the blue line here. So this is showing some vulnerability to the short-term trend. And we're keeping an eye on the intermediate term trend, 50 periods, and a double and triple exponential moving average here. We're dropping below the red and the blue line. And Swenlin trading oscillator, based on price and volume, have now both crossed below zero. That is negative. And we want to keep an eye on semiconductors. We're kind of in the process of seeing a death cross here. If you look at the top, the 50-period moving average is 225.87, and the 200-day moving average is 225.91. It's actually the blue line's actually a little bit below the red line now. This is a huge part of tech, and this is a huge part of the market. When this crossed over positive, that was a big deal for the market. If this crosses over negative and stays that way, this could actually switch things to looking more negative. And then we look at the cumulative advanced decline line for the NYSE, falling below the moving average, also falling below the moving average with the regular NYSE advanced decline line, where we had been able to stay above it for the most part here for most of 2024. And then the other NYSE advanced decline line also dropping a little bit below the moving average. Unless we can get that back, this is still looking more vulnerable. And we're seeing some weakness here with the advanced decline line. The NYSE common stock breaking below its moving average, coming down to the moving average with the S&P, coming down to the moving average with the mid caps, and dropping a little bit below the moving average with the small caps. Are we going to see a bounce up from here and recover this, or are we going to see more weakness coming after this? And the S&P McClellan oscillator below zero and declining. That's negative. When that's negative, the summation index based on price declines, and we're also seeing a decline with volume. That's more intermediate to even somewhat long-term negative for the S&P. The NYSE McClellan oscillator also below zero and declining, so the summation index based on price and volume are declining as well. And we're coming down now with the bullish percent index. Now, technically, we're still positive with this chart since we're above 50. But I plot a moving average on here, and when we're clearly going down, the context is negative, where we had been looking more positive. And we're also seeing a decline with the NYSE bullish percent index and the NASDAQ 100 bullish percent index. The momentum for the NASDAQ 100, it's not quite there yet, but if we cross below the moving average, that's going to change the momentum over to negative. And we're seeing interest rates going up, and that's putting pressure on stocks. Right about the time the Fed came in and cut rates, this is when the 10-year yield just took off and was going to the moon. Now, is the market anticipating economic growth that could be followed by some inflation? Possibly. Is it a given that the Fed's going to cut rates again at their next meeting? No. The market was treating it that way, but then Powell came out and said this week, well, we can be slower than we have been if we want to be. That's to paraphrase him. But this is causing a concern with interest rates going up. And now, if it's going up because they're anticipating economic growth in the future, that's okay. But if they're going up because they're fearing inflation and that's going to bite into corporate profits, that's not okay. And the Qs lost their 20-day moving average. So we're below that now, but we're still above the 50. And the semiconductors to Dow, this ratio continues to fall. This was the one chart that was on the negative side in last week's video. And it's not showing much of an improvement this week, but it's not necessarily falling apart either. So what are some areas that we're just keeping an eye on? On Thursday will be weekly jobless claims. They continue to go down, and that means there's economic strength because the employment situation means there's not a lot of people filing for first-time unemployment. And we're starting to come back down, even though the moving average is topping out here with the continuing claims. These are folks that are unemployed for longer than 1 week. Just want to keep an eye on this area. We want to keep an eye on oil like we've been watching, mainly for geopolitical reasons. And look at the dollar. My goodness, just going up into the 106 range here. And we'll have to see if it can keep going up. Now, it's still on a long-term downtrend, but it's really starting to improve here. But the stronger dollar is often negative for stocks. But at the same time, at least in the short term, it could be more positive. Why is the dollar going up? Well, hey, the US election, it went off. There wasn't a real compromise of the integrity of the system, like was accused 4 years ago. And Trump was able to win not only with the Electoral College, but also in the popular vote. So, okay, things are more set there. And then it looks like, well, he's a businessman and he came in and cut taxes before and he's cut regulations before. He says he's going to do that again. And this makes the dollar more valuable because the country is seen as more solid. But the dollar going up often pressures stocks because of the conversion rates and because of the import and export relationships. It just makes them not as friendly on the books. So thank you. I really hope you found this helpful. I hope you're having a wonderful weekend, and I will talk to you in the next video.